right? Since we have both a macro and technical approach over here, I kind of want to, dig in a little bit further on that, maybe go a little off script if that's okay. And I guess hear both of your inputs on, pros and cons of macro versus technical and from both sides. So pass that over to you, Dave. What's good about technical, macro, pros, cons,
well,
things to watch out for?
To be honest, I think you can make pros and cons, and I think they're similar for both camps. I think trying to be as objective as you can in your analysis is really key. And you might say, well, price action, that's pretty objective. Well, it is, but we have a tendency to be subjective about it. I think a good phrase that I think is really important to understand or to keep in mind is observe, not perceive. And that's especially true in terms of technicals. We always have a tendency, or I shouldn't say we, traders have a tendency to look at it and say, well, I think this will happen based on this, and that might be helpful on some level, but sometimes just kind of going along for the ride is the better thing. You're observing what's happening and you're drawing a conclusion based on what you see happening, based on what you think might happen. And I think we can get ourselves into a lot of trouble when we do that. I think you could probably make the same argument on the fundamental side. Whether you're analyzing a balance sheet, there's a degree of subjectivity to that. There's an art to reading a balance sheet versus just the hard P&L numbers. Same thing with macro, in terms of, economic data. Same thing, the numbers are pretty clear, but maybe we have a tendency to extrapolate going forward as opposed to looking at it and observing simply what is there. So I think as human beings, we err on using both of those when we get a little bit too much of an opinion or too much of a perception of what might happen versus actually just looking at what the data is saying and saying, this is what's happening and going with that. And that's a hard place to go or to be, 100% of the time.
Yeah. You mentioned something like, you get a perception in your mind and you think, well, this is supposed to happen and it's not happening. And I guess I can think that's one of the most frustrating parts when you're trading is you're like, well, you have a thesis and everything is going as according to your thesis, and then all of a sudden the markets aren't moving the way your thesis is telling you to do it. And I guess how do you control that? It's a little frustrating.
Let me just add one more little addendum to that overall commentary. Is that's where a lot of people get hung up. They think that trading is a game of black and white where A plus B equals C. And it's not like that at all. Trading is probably more of an art than it is a science. And, you have to have that degree of an opinion or a forecast. Like Priyesh was saying, we forecast last February that we were heading into a bearish situation. That's a forecast. It's not an observation. That's a perception. That's a forecast. And that kind of is at odds with what I just said, but it's also not at odds. It's how do you strike that balance between a very solid observation and an observation with a healthy dose of a forecast. You got to meld the two together. And the reason I bring this up is that there's this notion out there, especially in the midst of a bull market that we're in right now, that trading's like just so simple. You buy every pullback or you follow my 3 simple steps. And I think it's really disingenuous. And the fact that Priyesh has audited performance numbers, the fact that we have audited performance numbers is how you distinguish yourself in this marketplace. Everybody out there is claiming they know how to trade, and maybe a lot of them do know how to trade. But unless you're actually showing hard data that says, yeah, in this market environment, I was able to generate X and I'm still continuing to generate X, words just kind of fall flat because I know how difficult it is to trade. It's a very challenging profession. And it's your experience in the end that really kind of separates you and your process. You have to have a very, very strict process in place. People that jump around all the time, I don't know how they do it. Some people can, but most people can't. You've got to have a process in place. So I'll just leave it at that and I'm sure Priyesh has plenty to add to this. Maybe we agree, maybe we disagree, and that's okay.
Disagreements are always fun.
Yeah.
What would you say about macro versus technical, some of the holdups and stuff like that, Priyesh?
So for me, my main focus is it's a macro approach to the market. So my analysis is generally more skewed to the fundamental side, but I agree with what Dave said there about, the fundamentals, the data and things like that, that's facts, but how you interpret that, that's an art. So that's going to be subjective. And in terms of your trading, I think it's very important to find a balance between having a somewhat mechanical approach, but also having a bit of a dynamic approach. And I think the macros allow you to maybe add a bit more, at least from my perspective, they allow you to add a bit more flexibility to that approach. Whereas the technicals, I find them pretty useful for, looking at your entries, your stop losses, your exits. And technicals, I feel, is something that is gaining a lot more traction nowadays. And it works most effectively when you've got more people looking at those same levels and reacting to them. And since that's happening a lot more, I think it is important for everyone to pay some attention to the technicals, especially in this environment. From a macro perspective, the main theme is the economic recovery and the vaccination programs and things like that, which is going to play out over 1 or 2 years. It's not going to happen in a matter of weeks. So the thing you're generally looking at is a recovery. You're looking at going long on risk, a recovery in the stock market. But to position yourself and get into those trades, you're not going to really have any short-term fundamental catalysts. So you're better off looking at some of those technical levels and using them as a gauge of where you should get in, where you should get out, and how you should position yourself.